Going to space? Far out. But don't worry, this ain't gonna be no trippy-dippy hippie talk. These are serious space stocks to research, especially as some of them have fallen like shooting stars amid the broader market sell-off, mainly because they're less well-known companies that still need to win greater investor confidence beyond their initial early backers. For example, Firefly Aerospace was red hot as it fell to new lows to begin November. Yet some still hold on, especially as it successfully acquired SciTech, a leader in advanced national security technology, in a deal valued at $855 million. The acquisition strengthens Firefly's position in the space and defense sectors by integrating SciTech's expertise in mission-critical software and big data processing. Firefly's CEO, Jason Kim, highlighted that SciTech's capabilities in AI-enabled defense software, such as missile warning and space domain awareness, complement Firefly's own hardware, including launch and lunar vehicles. Another benefit comes in the form of the addition of over 475 skilled employees, bolstering Firefly's ability to support national security programs, including missile defense and space interceptor missions. It also enhances Firefly's infrastructure with state-of-the-art facilities like data centers and mission operation centers. In general, the deal positions Firefly for expanded opportunities in national security, commercial space, and even Moon-to-Mars missions. Moreover, SciTech's existing contracts with defense and intelligence agencies will provide a solid revenue base for Firefly. SciTech will continue to operate as a subsidiary under its current CEO, Jim Lisowski. Over on the financial edge of the space industry, Voyager Technologies has priced an upsized offering of $435 million in convertible senior notes due 2030, a significant increase from the originally planned $300 million. The notes carry a 0.75% interest rate and will mature on November 15, 2030. The initial conversion rate is set at 32.28 shares per $1,000 principal, which translates to a conversion price of $30.98 per share. The plan is to use approximately $63.1 million of the proceeds to fund capped call transactions to mitigate dilution. $27.7 million will be used for share repurchases, 1.16 million shares at $23.83, and $131.1 million will go toward a prepaid forward stock repurchase for another 5.5 million shares. The remainder will support general corporate activities, including organic growth and acquisitions. Voyager remains in a strong cash position, with $413 million in cash and minimal debt of $10.51 million. However, its recent Q3 results highlighted ongoing financial challenges, including an adjusted EPS loss of 22 cents, which, while an improvement from last year, still fell short of analyst expectations. Revenue for Q3 was flat at $40 million, largely due to the phase-down of a NASA services contract. Despite these struggles, Voyager is maintaining a $3.6 billion pipeline, positioning itself for future growth, especially in the defense and space technology sectors. Looking ahead, Voyager's acquisitions, such as Exoterra for its electric propulsion technology, are expected to strengthen its competitive position in space systems. Indeed, its investments and initiatives in high-value subsystems, including propulsion and power technologies, will play a key role in its future trajectory. That's why the bullish crowd would say profitability remains elusive in the short term, but the strong sales pipeline and ongoing investment fueling innovations suggest a positive long-term outlook, albeit with some uncertainties around government shutdowns impacting project timelines. Now, when directing your stock tracking telescopes to the moon, space optimists would have a similar stance and avoid calling Intuitive Machines a lunar loser. It's also looking at the long term in light-year terms, as shown by its acquisition of Lantera Space Systems for $800 million, a deal comprising $450 million in cash and $350 million in stock. This acquisition is expected to significantly enhance Intuitive Machines' capabilities in communications, navigation, and space data networking for defense, civil, and commercial markets. LUNR's strong track record in spacecraft manufacturing and its established client base in national security and civil space missions will complement Intuitive Machines' existing lunar operations, expanding its capabilities beyond lunar landers to full-service space infrastructure. The combined company is projected to generate over $850 million in revenue and have a backlog of $920 million post-acquisition, leading to an increasingly brighter view for higher revenue, adjusted EBITDA, and free cash flow, with the integration expected to open new markets in national security and civil space. Though, like its peers, Intuitive Machines' latest quarterly results were contrasting, with revenue of $52.4 million, which missed analyst expectations of $68.1 million. Net loss was $10 million, reflecting ongoing financial challenges, while its adjusted EBITDA was negative $13.2 million. However, this marked an improvement of $12.2 million from the previous quarter. And to look further on the bright side, the most recent quarter ended with a backlog of $235.9 million and a strong cash balance of $622 million, instilling confidence there's enough financial fuel to keep growing out of the emergence phase. As for external factors that may impact short-term performance, Intuitive Machines and the broader aerospace and defense industries face uncertainties, notably around a potential government shutdown, which could affect the timing of revenue recognition and backlog execution in Q4 2025. Regardless, Intuitive Machines is confident in its ability to capture near-term awards and execute on its current backlog. It also expects to provide an updated outlook for the combined entity with LUNR in early 2026. In the meantime, closer to planet Earth, Vodafone and ASTS SpaceMobile have announced plans to establish a European satellite constellation, aiming to provide satellite-to-smartphone connectivity for both commercial and government applications. The initiative will be managed by a joint venture between the two companies and will feature a European operational center set to be located in Germany, possibly near Munich or Hanover. The center will oversee satellite connectivity, enabling mobile network operators across Europe to deliver broadband services and support public protection and disaster relief. This satellite network is designed to support reliable, broadband speed connectivity, particularly in underserved areas where terrestrial networks are unavailable. The constellation will feature a command switch for secure European oversight, including encrypted communication and satellite control. The service will also be capable of assisting emergency responders in challenging environments. Commercial operations are slated to begin in 2026, with 21 European Union member states showing interest in the service. ASTS SpaceMobile, which plans to deploy up to 60 satellites by 2026, will help expand mobile connectivity coverage across Europe, contributing to the development of a pan-European mobile broadband system. Vodafone's CEO, Margherita Della Valle, highlighted that the constellation will provide sovereign satellite solutions, offering secure satellite communications to complement existing terrestrial networks. This project is also in line with the EU's vision for enhanced communication during crises, aligning with the EU Critical Communications System. At the same time, the initiative marks a competitive move against SpaceX's Starlink, which has been expanding its own satellite connectivity services, including a recent deal with VOYG. For more on stocks and crypto, follow Ascencore. See you next time.